Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the US Fed is backing Powell over Trump. In its latest review, the US Federal Reserve has kept its policy rates unchanged. This is on the basis that the US has a low jobless rate and it is likely to stay low, and most inflation measures are near its target 2% level. But it did acknowledge that uncertainties about this outlook have increased. The decision was 9-1, with the dissenter a long-time dove. Having said that, it did remove the word patient from their statement, and their dot plots suggest one rate cut by the end of 2020 and none in 2019, far slower than many observers have been assuming. However, this dot plot is different because the prior one saw more chance of a rate hike in 2020. But if you actually take a look at these two dot plots, you might find it hard to conclude a rate cut is a firm part of their thinking. The US dollar fell, US Treasury bond yields fell, equity markets moved from negative territory into positive territory in a smallish jump. Overnight, European markets were little changed, although UK equity markets fell on political uncertainty. Yesterday, Asian markets were all up strongly. In Canada, inflation is rising, coming at 2.4% and well above the 2.1% that markets were expecting. In China, they're approaching their annual period where banks face seasonal liquidity stresses. But this year, these stresses are magnified by the contagion of a small bank failure and spillover into the non-bank finance sector. There is a growing sense that Chinese financial regulators are losing control of the situation. If they don't regain it soon, and before the annual liquidity squeeze, financial stability in the Middle Kingdom could waver. In Australia, the iron ore price just keeps on rising and rising. It's up over $106 a tonne, and it is more than a 50% rise since the start of the year. US Treasury 10-year yield is now just under 2.03% and down 3 basis points from yesterday. Gold is up $3 today to $1,349 an ounce. US oil prices are soft today as high American inventories overwhelm supply tensions. They're just on $53.50 a barrel, and the Brent benchmark is on $61.50 a barrel. And the Kiwi dollar is firm against a downward adjusting greenback after the FOMC decision, now at 65.4 US cents. On the cross rates, we've risen too to be at 95 Aussie cents, and against the euro, we're up to 58.4 euro cents. That puts the TWI at 70.3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.